Yo, what is happening, fam? Welcome back to another week of fundamental analysis. Um, quite a quite an eventful week this week. Um, let's go through the trades currently. And the setups. So I took had one trade this week. I took one loss on gold. Um, let's see the rationale for it. Okay, so with gold, we go to a daily chart. I was bullish gold. Gold did have. I did take a trade on the 9th, which we ran up to around 6.5R. Okay, and then we obviously got stopped out. So if we were to clean up the chart again, this would have been the two potential areas that we were looking for. So what I saw was, if we go to the daily just to have a look, we still had that impulse. We came back down. I was still bullish gold. Sentiment wise, there was nothing that changed fundamentally. I had this area here and this area here marked up. Obviously the target was here, so we had an alert there. I saw this rejection wick. I believe the candle would have been here as well at the time. I did see it sort of still hovered around here. I was happy that gold did. Price was just sort of waning here, so I got in on this candle here at around 6 a.m. or this candle, either or. I got into this trade at around 6 a.m. in the morning, Monday, which is the 22nd. You can see it was chop, chop, chop. It actually went up around 2R. Nothing from a structural point of view told me to move my stop loss. I kept it there, and you can see we broke down. With gold right now, at least from a retest point of view, it looks like it is retesting that area there. I'm going to take this one off here just to clean up the chart a bit. You can see gold did sort of take this area here of liquidity. Let's see what it's going to do around this area here. But this week we are in no trades right now, so yeah, we're just chilling. We are just chilling right now, and I'll let you know from a fundamental point of view why. Okay, so let's hide this trade. We've already taken that loss. From a money point of view, how much we've made, how much we've lost. So we've made that 6.5R on the first week, or second week, sorry, with gold. Third week we took a loss on oil, and then fourth week we took another loss on gold. So that's those 4 weeks done. We still have another week left of July, which we will wrap up shortly. But I am actually not going to be trading this coming week. And again, let's go through the reasons why. So, go through my slideshow. 22nd of July to the 28th of July. COT report. So, what do we see on the COT report? We see, from a change wise here, last week we saw a huge volume injected in the pound. You can see the yen was starting to pick back up on its on being bullish instead. It did sort of really rapidly drop. So we also saw an increase in US 30 bias to the long side. Can't really speak too much on bias change. Oil, gold, silver pretty much remained the same. This week we see it's bullish on yen. No change on USD. We aren't trading any currencies. Aussie's a bit lower. I don't know from a fundamental point of view why that's happened. Again, we're not trading that, so I'm not touching it. The indices is very interesting because we see an increase in S&P 3% to the bullish sentiment, and we see a bearish sentiment for NAS 100 and US 30. However, we did mark up US 30, which I'll go through a bit later towards the end of the video. Bias change wise in terms of oil, gold and silver, again nothing too much to comment on. I'm only trading oil and gold, and 1% it's not enough of a shift for me to really care about. So COT report pretty much useless this week, or not useless, but nothing I'm going to use and extract. Now from a data point of view, what did we have this week? We had GDP, and GDP actually rose to 2.5% from forecast 2%, which is huge. This is going to be the main topic we're going to talk about. We also have PMI and manufacturing services and manufacturing. You can see they sort of cancel each other out. Bullish on services, bearish on manufacturing. Hotter than expected on services, cooler than expected manufacturing. So we'll go through it right now. Okay, this week's data. Starting first with Richmond Manufacturing Index. This has been on a steady decline since 2021, so just really highlighting the sentiment from the the manufacturers not being well. Does that mean rate cuts are in the foreseeable future, or would rate cuts come sooner than expected? Who knows? We're going to have to look at the other sort of newses and hot points. So home sales, both existing and new home, you can see both were lower than expected or cooler than expected. There was a mention of decrease in existing home sales with an increase in home prices. So again, that concept of inflation still being quite present, at least in home sales. Does that mean we can cut rates now or not? These two, at least from these two that we've just mentioned, kind of go against each other. So uncertainty essentially. Now Euro in terms of French, German, and flash manufacturing and services PMI. Confidence was actually at the 6-month low, lowest employment hiring since 2024. The chief economist of Hamburg Bank, Dr. Rubia, states that if only PMI numbers was used and data was used, you can see it's very, very cool heading down 6-month low. We would want to cut rates. However, she does mention that the prices in terms of what the manufacturers and the services industry is paying for things is still high. So that's still that concept of inflation. Again, we're not trading euro, but it's just good to sort of have my mind on the currency. Maybe I might add it into my agenda, who knows. The pound PMI we've had as well, so that was hotter than expected for manufacturing, around break even or similar for services. So overall, net bullish. Manufacturing output rose to the strongest degree since February 2022. Increase in employment as well, so this is very bullish on the pound. What does that mean? It really depends on rate cuts as well. We've got to take that into consideration. But good news for the pound essentially. Now, the guy we're looking at, USD. You can see manufacturing and services, manufacturing cooler, services hotter, pretty much cancelling each other out, I guess you could say. However, from an overall PMI data sense, it was 55.0, which is the highest since April 2022. So that's saying the US economy is doing well, even despite the high interest rate right now to curb inflation. So you can see it's just very mixed signals. Now the GDP as well. GDP, the biggest one, advance being the first reporting, which makes it probably the prime mover. You can see from a 2% to a 2.8, and from a previous 1.4. That's revised, but still, what a jump! Pretty much double from last month, right? So what I've written down was strong data on from the GDP sort of data. There was strong data on increasing consumer spending, resulting in an increased GDP from the forecasted. So USD, high interest rates, inflated market, consumers are still spending, and it does support this strength in the US economy despite high interest rate environment. However, uncertainty due to the election that's coming up, as well as obviously going to change policies and whatnot, high costs regarding inflation, and therefore interest rates questionable. I put a bracket, no bias. I don't know what to take out of this reporting this week. Next week is actually a huge week as well, where we have interest rates from various countries. We have NFP as well. So I'm not confident in going anywhere for oil or gold. We can see GDP wise, I would say let's go long oil. PMI wise, let's go long oil. Right, strong economy, strong manufacturing, it's good. However, you can see even the consumer sentiment for Richmond manufacturing has been on a decline since 2021. The PCE numbers right here, they're still, they haven't shifted, they haven't moved, and PCE being a sort of forecasted for inflation, so it means inflation's still high if it hasn't trickled down from forecasted, or from the previous at least. University of Michigan sentiment the same as well. So we can see there's two sides of the coin. You can take it, and this is the reason why you want to build your biases and whatnot, and have a stop loss there, because you could be wrong. You could and you being wrong, if you don't have a stop loss, you could be down a lot more than you should. So let's go more into the actual data points. So Richmond Manufacturing Index that we mentioned, you can see forecasted, actual, right? So obviously negative being bad, you can see it's been down in this region for the last 2 years. This is a 2-year period. There's only been 4 months, not even 3 months out of 2 years where it was higher, and there was growth in the Richmond Manufacturing Index, at least from a sentiment point of view. So very, very bearish, forecasted slam down, forecasted slam down, forecasted slam down, so forecasted slam. So we're just very bearish from a Richmond Manufacturing Index point of view. Again, this is just one region, so we can't really speak on the other regions in the States, but this itself is just telling us very bearish environment, very very sad economy. Flash manufacturing though, you go to this now, so you go revisioned higher, forecasted higher than forecasted. In the last, from 2024, we can see that PMI numbers for manufacturing is actually going up. This month we had a decline, so forecasted straight down. But the other months we've got, a revision up, a revision slightly down, a revision up, revision still close. Shot down a bit this month, but you can see it's headed in that right direction for PMI. Services above this line for the past, again, year and a half has been in expansion, forecasted above, so very, very bullish from a flash services point of view. So what that means is, at least, taking into consideration the economy, the US economy, it's actually quite bullish right now. There's good signs of the economy's actually quite good, even with these high rates. So just something to note in the back of your mind. GDP, this is 2 years for GDP. You can see from 2023, I think this is quarterly as well, I believe. Yeah, quarterly. So rose up to its highest around Q4, dropped down, but you can see it's always been revised up. This one was revised down, but this month, this quarter in particular, has been revised up. So, or forecasted up. Sorry, not revised. So, yeah, because this is quarterly, it's a 3-month per bar. That's very bullish for the USD. So we can see flash services, manufacturing being above for the last 6 months, GDP for the quarter being a lot higher than forecasted. We are very, very bullish on the USD, at least for this week, taking into account this week. PCE, you can see PCE wise, going down. Seems like rates are doing its job. It's cutting down, and we might look at a rate cut, right? High inflation, high interest rates comes down. This year starts again, high inflation, interest rates doing its thing. So if we reach around this zone here, there's no reason why we shouldn't cut rates, at least taking into account inflation sort of, by itself. And considering the US citizens and people are still, having pressure in terms of pricing, so, and unemployment and not buying houses. So Can rate cuts come sooner? Rate cuts, what does it mean though? If we cut rates, what does it mean for the actual US economy? It means people are going to be more risk taking. The stock market's going to go up. And again, this is just taking into consideration fundamentally, right? I'm not saying it's going to happen. I'm saying it's more likely for it to happen. We got lower rates, people borrowing more, they're more risk on, and they'll want to invest their money, make more money. So stock market goes up. In terms of gold, it really depends. Typically, rate cuts is good for gold. It means, again, we're taking money out from the dollar. However, if people are more risk on, what does it mean for gold? Gold is a safe haven currency, so it just really depends on the political climate as well. So if rate cuts come down, if we get rate cuts, however, there's still some uncertainty. There is still geopolitical news in terms of war in the Middle East, maybe potentially against China, less so Russia nowadays. But in terms of Russia, Russia, Ukraine, if anything like that happens, any big news there, gold's gonna be the first thing to go up. So, I think my strategy, my game plan for Q4 is, if rate cuts do happen, start looking at setups to the long side for the stock market and the indices. If there is rate cuts but there's geopolitical news and tension, start looking at long setups for gold. If there's no tension, we could potentially long indices, short gold. Now oil's sort of similar to gold, but oil also sort of similar to stock market. So if we have rate cuts, people are spending more, people are buying more, people are manufacturing more, we have more homes being sold, we have more cars being sold, people are traveling more, oil prices go up, right? Geopolitical news, oil prices go up. So right now, yeah, that's the mind frame I'm on. I think the three commodities to trade, oil, gold, and indices, are a great combination to use, and I can really focus on the USD. But that's my sort of take in things. Next week, like I said, there's big news next week. We've got consumer confidence, we've got job openings. So if this is cooler than expected, which means there's more job openings. It means there's less job openings. Less people have employment. That means rate cuts are more likely because the people are suffering, right? We've got CPI for Aussie, my country. Very interesting to see. You can see CPI year to year is actually looking like it's going to dip. If it dips, rate cuts, I'm actually in the process of maybe moving out and buying a house. This would be very important to me because I know that when interest rates come down, this is the thought, that interest rates come down, people are going to borrow, right? And I want to actually get in the market when people aren't borrowing because I want to be the first to borrow, essentially. So I'll be keeping a very keen eye on that. Me and the missus will be looking to buy shortly. If this does come down sooner, I really want to get in the market sooner, just so we can get the best price on the houses. We got Bank of Japan policy rates. We have Euro CPI. We have Fed Thursday rates as well. We have pound rates. We have not CPI. We have the what's that one every month? NFP, unemployment rates. We also have ISM, manufacturing PMI numbers. So big week. I'm uncertain about the market. I've got, it can go either way. I see, what's in terms of strength for the dollar. We've got people still buying with inflation. People still buying stuff, even though it's super inflated right now. We have manufacturing, services being up. We have manufacturing cooler than expected, but somewhat up in the last 6 months. We have GDP doing good, so that's good news for the USD. But what do we have in terms of bad for the USD. We have unemployment. We have the elections coming up, which could change the whole dynamic of things. We have, again, that inflation, the prices. Even though people are buying, it's still an inflated market, right? So I don't have a bias on anything. And we'll go through the charts and have a look from a technical sense. It's not looking nice as well. So no trades this week. Let's go to the charts. So first one is USD. Go daily. This is pretty much for the last trading week. You can see there, even the charts are sort of reflecting my view. We go up, we go down, we go up, we go down, we go up, we go up and down, and we're just consolidated in this area. So there's uncertainty. That's price saying there's uncertainty right now. This is a nice level of support. So if this happens, I wouldn't be surprised. And if this happens, I'm expecting to gold. I'm expecting to oil, and I'm expecting in terms of stocks. I'm not sure about indices in terms of if the dollar goes up. It really would depend on the other economic news. So that's my 2 cents there. That's, again, this is personal bias, not I'm not saying it's going to happen. That's what I'm just thinking. Now let's go on gold. You can see gold actually took support here, but like I said, if the US economy is doing good, right, and if we do or don't get rate cuts, I don't know what's going to happen. I'm not sure if gold's going to go down, or I don't know if it's going to go up right now. So I'm just not going to touch it this week. I'm just going to leave alone. We're just going to see and re-review after the news next week. Same thing with oil. So what my original plan for oil was to get in short here, right? But if manufacturing's doing good, if GDP is good, which means production and using oil as a commodity, then technically, we might have a low here, but it could even just shoot back up, right? If we go to a weekly chart, what's it look like? Is it more? Yeah, from a weekly point of view, that's a potential area to get rejected, right? Technically, from a technical point of view. So I'm not willing to take the risk. I'm not willing to put my money on the line for this somewhat trade, right? So I'm just going to take everything off. Taking everything off. I'll leave my little cute ass trend line there, and we're just going to let oil play out. We're going to take these markers off because we're not trading, and we're going to leave it alone. Now why am I watching these three? This is the only commodity that I might add in, or this is the only market I might add into my trading. These other two is just for fun. AUD, USD, I'm Aussie, right? So I want to have a look at how the Aussie's doing. It's not doing too well right now. Again, I don't know why. I believe rate cuts are probably coming soon, maybe, potentially, so that might be a reason. So I don't know, but Singapore yen, I am going to Japan in October, so I just want to have a look when this starts going back up. I'm not going to predict. I just want to get back in at this rate, exchange my money and be happy with 120 yen per Singaporean dollar, which I've got right now to spend. So once we reach there, if I can reach 120, let's say I convert at 115, I've got that much Singaporean dollars. I have around 140k yen. That's good spending, right? 2.5 weeks I can spend that much. Add a little bit more if I need, but that's great. So that's that. US 30 is the only market I'm keen on. Now look at what US 30 did. I spoke to you guys last week, so there's proof in the pudding. Last week, go to my other video last week. I called this out. It would have been here, right? It would have been the Friday. Yep, would have been the Friday, and I said this is a nice resistance potentially turning into a support zone. I'm gonna just have a look, which is why I marked it up with that arrow. And what ended up happening was exactly that. So this is Tuesday, Wednesday, tapped in. Now I remember specifically looking at this area here and seeing that already. I've seen this candle. Let's just say I didn't take it in, and let's just say we got in this position here. Again, I'm not saying I'm doing it. I'm just saying let's just keep it tracking. Let's say if we were to actually trade this market, what would play out? Currently we are up, right? It's taken this high. I would move this to break even. Okay, let's move that to break even. It went up around 2.6R. Technically, it's also taken this area here, right? But we're not going to worry about that. It didn't break it nicely. So let's leave it at break even, and let's just track this like this is forward testing. Let's track this like we're actually in this trade, right? And then if dependent on next week, we've got big news. Next week we've got rate cuts. We've got oh sorry, not rate cuts. We've got interest rate sort of news. We've got PMI for ISM. We've got big news, NFP. If we see this, right, put our stop loss under there, whatever it might be. If we see that, we move our stop here. We're already up 1.5R. We can move it again, whatever it might be, or we get taken out to break even. Who cares? Let's just track. Let's forward test. Let's see if we are we are profitable on US30, and we can add this into our markets, because like I said to you guys before, imagine having gold, right? Imagine having gold which is sensitive to yes, somewhat geopolitical, but it's more so sensitive to sentiment, right? Scarcity. Safe haven. It's the ultimate safe haven. Well, let's write that down. Ultimate safe haven. So we've got all that. Those are the great biases of gold. Now let's put in oil. Geopolitical is the first thing I think of, right? It's very sensitive to geopolitical. Very sensitive to the economy. Just the economy. People are using oil as a commodity. It's used in everything. If the economy is doing good, people are spending, people are moving around, oil's going to go up. So geopolitical, economy, and then the last one, stock, right? Biggest one is its economy, and stock is almost or indices, sorry, especially US30, Dow being top 30, big players, right? So that's the ones we want to follow. We got the economy. It's very sensitive to the economy, and very sensitive to interest rates. Whenever you think low rates, you think people spending, you're almost instantly you can put that on indices going up. If the indices like your US30s, your big players, Apples, your Johnson and Johnsons, if interest rates go down, people are going to spend more on that, right? If Apple releases a new iPhone and interest rates are down and people can actually borrow more money, what do you think is going to happen? Connect the dots, right? So these three things, they can almost overlap somewhat, but they've got their own unique characters, which is why I think if I add indices, I've got strong three markets to actually play around, and I can focus just on the dollar. I'll add in the other countries just because other countries will affect the US dollar as well. If another country is doing better, then the US economy is not doing good in comparison, that could play a role, right? So I'm excited. I did say, and look, I could have easily taken this trade, and I could have easily stroked my ego and said, hey, I could have made 2.5R. But that's not the point. I told you guys I'm just trading oil and gold for 3 months, right? I've pretty much traded oil and gold for 2 months now. This is going to be last week. I'm not trading this week, so this is my stats for this week. Let's just put it down. I'm going to put it down. These are my stats for this month, because I am not trading, and if I say that, I'm going to stick with it. My results for this month, guys: 4.5R, $260. I can verify it with the MT4 guys. I don't know what details I need to take out, so that's the reason. That's the only reason why I'm not showing you guys my MT4 account. But this is all legitimate. I can backtrace it. You know, when due time, when I'm profitable and I become bigger, I'm gonna backtrace it for you guys. But look at that. The moment I switch from just trading 2 markets, right, and not all this other bunch of bullshit. Look at how many losses I took, right? Moment I switched to 2 markets, and mind you, it's only made profit with gold, right? But there was very, very close reasons why I could have made money off of oil as well. It's just a stop loss thing. It's just a, you know, let's just even have a look. This one I was completely wrong, right? It did take it here. I would have been break even there, but you know, that's the point of a stop loss. It's there for a reason. It's for my safety. And then oil here. This is the one that should have actually won. So if we want to have a look at that, let's just do that. Go on oil, and that was this one here. No, sorry, it was the first one. First one on oil. If we actually, you see, we got wicked out literally, you know, a couple. I'm gonna call it pips. I don't know what it's called in oil, but we could have made, you know, if I was to tighten my stop, a nice 1.8R, and that would have made up for the initial loss in oil. Sorry, the secondary loss in oil and some, right? We would have been up 0.8%. So, guys, this is a very, very successful 2 months of trading. Up to 2.25R, up 4.5R. I am going to, after the 3rd month, I am going to increase that if I'm profitable. And again, it really depends on how August goes. Let's have a look at how August goes. If I'm down 10R on August, then obviously I'm not going to double my lot size. But if, let's say I'm break even on August and they're all legitimate trades, or let's say I'm up in August, or let's just say I'm a little bit down in August, 1R, 2R, there's no reason why I can't increase lot size. I've got 3 months, which is small in the grand scheme of things, but look at this, 3 trades a month. Psychology, what does that say about psychology? Right? All legitimate trades, 2 wins, 1 loss here, which was, you know, we got wicked out. Direction was still good. 1 win here, big one, held it. 1 loss here. Sentiment wise, right? In terms of what I thought at the time, from a fundamentals point of view, didn't move my stop, left my stop there, got wicked out instantly. Those are the ones that, these are the great stops, because you know you picked the wrong side and you get out immediately. There's no emotion, it's just you got it wrong, done. That's participation there. Gold here. You got it wrong, right? You had a nice level as well. This wasn't just an everyday level. You had a wide enough stop to cover your bases after that rejection week, which is a bullish sign. Everything's right in this trade. You know, you had a big impulse there. You had an impulse come down. It could easily went back up. And then if that happened, right? Again, we're playing scenarios, but if that happened, that trade here where you look like a fool and took an L, which isn't even a bad L. It made sense. Everything lined up. It was probably, I wouldn't say it was a A+ setup, but it was at least a B+. Right? So if I'm taking a B+ setup, and let's just say theoretically this loss here, right? This loss here got even just back to where it was. That's 4.5R right there. And then by that point, if I had that right, everyone would be saying, man, you're a genius. So even just one little small thing, 1 loss turned into 1 win, is 5.5R difference. This oil trade here, I was what, 2 pips away from my stop loss, and that changed my whole trajectory. Instead of -1 and instead of 2.25R for the month, I could have been up 1.8R. So that's another 2.8R, which is what, 5R. for the month. 5R for the month, you times that by 2, pretty much. So $240 up, $220 up. You know what I mean? So these are all scenarios, but I'm just trying to get you guys to think that it's literally just small changes that could go either way. But you managing risk, me managing risk, me controlling, 3 trades a month, and being able to actually make money with 3 trades a month. What does that say, guys? Say something there's something working. There's something in the, there's something that's at play right now. So August. We wait for August. Let's pop it in right now. Let's sediment this. We've spoken. We've put this into the universe, right? Put it into God's hands. Whatever you want to say about it. We're going to start fresh here. Okay? We're going to clear this bad boy off. We're going to keep that just as what we need to fill in. An example. Okay? And we're going to start right there. We're going to start at that much. Let's just put this number in, right? Let's say this 2.5 months. What do we start with? Well, 1810.96 minus 6534. We started at 74553. 74553. At the end of July, we're at 1,062.66. $300. $300 for 2 months. Not bad, man. I'm gonna say not bad. And we've got money to put in. This is. I'm risking $60 for gold. I'm risking $40 for oil. Right? Or roughly thereabouts. Right, $40. Yeah, 60 for gold. Imagine me doubling this now. Right, which I can. I've got capital in the bag. Slow and steady, guys. I'm manifesting this. This is going to happen. This is going to be the year I'm profitable and consistent. It is. I've been doing this for what? I started trading 2022. 2022 we started trading. We've logged it on YouTube. Everything's documented, guys. You can go back, you can see what I've done. Everything's documented. All those numbers are true. I'll pull up my MC4 when the time comes, when I'm actually profitable and you guys want me to pull it. I'll do it. I'll block out what I need to block out, but this is all legitimate, and this is just for me, giving you guys content. The most important thing about trading right now for me is to know that it's possible. And I'm going to be an example myself, and I'm going to document this, and I'm going to manifest this, and I'm going to eventually be a coach, trading coach. I'm going to be a mentor, one-on-one mentors only. I'm going to be profitable. I'm going to make enough money to live off trading. I'm going to have a mentorship and make money off of that, so I can put it back into trading as well. And at that stage, I've done the hard yards, right? So I'm going to stop there. I'm rambling now. I'll meet you guys next week. I'm not going to trade next week, I said it here. I've said it first. If I trade next week, I'll be honest with you guys and I'll say I've traded. But I know I'm not going to trade next week. Plus, let's be honest, guys, trading's a little bit boring. I like doing the analysis. I like being in a trade, but the actual trading process, man, if I can take a week off, I'll do it. So let's take a week off. Speak to you guys next week.